Hello and welcome to another edition of Market Briefing. I'm Martin Bakkerdax, European business editor here at the IB Times UK. Well, we're looking at a fourth consecutive day of gains for European shares. Modest once again, but you have to like what you're seeing with respect to momentum. We're up about 0.5% for the FTSE 100 and for the DAX, and about a similar percentage for the broadest measure of blue chip share performance, the FTSE Euro First 300. Yesterday, in fact, it had one of its single best days of gains in around 3 months. And all of this seems to be built around not only the continued support that investors are getting from central banks around the world, but an increasing series of positive data out of China, the second largest economy in the world, and increasingly the most important. Lending data from the People's Bank of China today showed that new loans for the month of March exceeded 1 trillion yuan. That's an enormous sum, almost double the figure for February and well ahead of analysts' expectations, along with the slower than expected inflation figures earlier in the week and better than expected import data. It has to be said that the bank, I should say the People's Bank, as well as policymakers in China, have probably executed and orchestrated that soft landing that many investors were hoping for. Bank of Japan, of course, continues to be active in the marketplace. They're going to be buying around $76 billion worth of securities each and every month as part of its amped up plan of quantitative easing to fight deflation. That pushed the Nikkei closer to a 5-year high and pushed the yen down closer to a 4-year low. Last night in the United States, we had record closes for both the Dow Jones Industrial Average and the broader S&P 500. Again, most of it seemingly built on that continued support from the U.S. Federal Reserve. Leaked minutes from the Open Markets Committee suggested that while there has been a discussion about pulling back on the $85 billion of monthly asset purchases, that's likely not going to happen until we see significant improvement in the labor market. And it must be remembered, those comments came as part of the 19th and 20th March interest rate decision before the payroll figure for March, which showed only 88,000 jobs added by U.S. employers. Here in the United Kingdom, we're watching two events with interest. Firstly, Marks & Spencer delivered quarterly sales figures, the best in about 2 years, although that was largely built on food. Basically, general merchandise sales fell about 3.8%. It was better than analysts had thought, but nonetheless, it does suggest that that transition towards almost a pure food-driven sales strategy continues to pace. Shares, though, well, investors seem to like it because they're up over 5%. Car makers are another story that we're looking at quite closely. Toyota, Nissan, Honda, and Mazda have all recalled vehicles around the world in relation to an airbag issue, which hasn't caused any injuries as yet, as far as we know, but nonetheless, it means that millions, over 3.5 million cars actually around the world, will be recalled by these major manufacturers. Here in the United Kingdom, around 76,000 vehicles by Toyota and around 59,000 by Nissan are going to be pulled back as a result of this error, this technical fault found in the airbags. I think cars built around the 2002 vintage. We'll keep an eye on that story as it develops, of course, and many others. So do check out the IB Times Economy page. We'll see you tomorrow.